Hey there, I've downloaded the HPLRPS auto installer zip file. So now I'm going to go through the process of installing this onto my chart. So the first thing I'm going to do is double click to open the zip file. And with this open, I'm going to double click the HPLRPS exe file. Now you may need to extract these files before you do this. I'm using a program called WinRAR, which enables me to be able to manipulate these files from inside the zip file itself. If you can't do that, go ahead and extract the contents. And then when you do, double click to run the exe file. And I also get this installation wizard. So I'm going to close the zip file. And now with the installation wizard, I'm simply going to click next. And I get this error message because I have a MetaTrader chart open. That is the chart that you see in the background. So I'm going to X this to close it. And I'll hit OK on the error. And now I'm going to accept the agreement on the installation wizard and click next. And from here, it's going to select all of the different platforms that you have on your computer. So I want this installed on all my platforms. So I'm going to leave them all selected and I'll click next. And again, I'm going to click next. And now it is installing onto my computer. With that being finished, I'm going to click next. And now we are done. The installation is complete. So I'll click finish. Now I'm going to reopen that platform that I had closed. And from here, I'm going to go to my templates and we're going to see we have the HPLRPS template. I'm going to click this and there we go. We've got the system installed and on our chart. Hey there, I would like to introduce you to the HPLRPS trading system. This system is really simple and it is very efficient. It is going to get you a lot of great trades. It is going to reduce the risk on those trades very quickly, very efficiently. And the trades that you're going to get, they are indeed high probability trades. So what we're looking at here is the template. This is the HPLRPS template, and we've got three different components to this. I'm going to walk you through the different components, explain what they do, and then we're going to go through some of the rules. I want to keep this video as short as possible. I want to get to the point, and I don't want to keep you here longer than you need to be. So let's start with the different indicators. The first indicator that we might notice are the horizontal dots across the chart. If I double click on this, we're going to open up the properties box, and at the top you can see that the indicator name is SUP-RTF. This is support and resistance time frame. What this does is it points out different fractals for us and gives us a horizontal line until that fractal is disrupted. And what this essentially means is this is support and resistance levels that we're looking for the market to close beyond in order to give us a trade. When we're looking for short trades, we want the price or a candle to close below these magenta levels. And we're looking for long trades, we're looking for the market or a candle to close above the blue levels. The next thing that we're going to look at are these moving averages. We have a blue and a magenta moving average. These are the 8-period EMAs of the highs and of the lows. And what they do is form a moving average channel. When we are looking for short trades, we're going to be paying attention to the blue moving average across the top. When we're looking for long trades, we're going to be paying attention to this magenta moving average across the bottom. What these moving averages are going to do for us is give us the ideal position to place our initial stop loss, and they are going to give us a method that we can trail our stop loss to reduce the risk on our trades very, very quickly. Now, the last thing we're going to see at the very bottom here is the MACD. Now, this is your standard MACD, but we do have some not so standard settings. The MACD settings for this is 8, 21, and 5. With the 821, we're looking at a trend. With the 5, we're looking at the signal line. This is the red signal line. So with the 8 and the 21, we're going to see a trend. This is going to give us the direction that we want to trade. With the 5, we're looking at this red signal line, and that is going to filter some of the trading opportunities. So as this MACD drops below the 0 line, which is this horizontal flat line, the histogram originates and moves out of that 0 line. So if the histogram is below the 0 line, we're going to be looking only for sell trades. If the histogram is above the 0 line, we're going to be looking only for buy trades. And it's really that simple. If the MACD is bullish or below the zero line, sell. If it's above the zero line, buy. And it's really as simple as that. So once we have that trade direction, we know if we're buying or selling. At that point, we're going to be looking to the support and resistance levels here, these lines, for the entry signals. Now, the filter mechanism on the MACD is this red signal line. If we're looking for sell trades, I'm going to zoom in just a little bit here. If we're looking for sell trades, what we want to see is that the histogram is below the signal line. In an area like this, where we're seeing, I'll move that right in the middle of the chart. With an area like this, where the histogram is indeed below the zero line, but the histogram itself is above that signal line, we are not going to be interested in taking any short trades. We want that histogram to be below that signal line. And when the trade is good or high probability, we're going to see that that is the case. And when we're looking at long opportunities like this, the histogram is going to be above that zero line, but we also want that histogram to be above the signal line. In this section in the middle right here, where we can see the histogram is below that signal line, we are filtered out of any possible trades. We're not going to take a trade if that is the case. However, when that histogram does move above the signal line, we are interested in looking for long trades. Now, what I'm interested in is that gap between the histogram and that signal line. If there's no gap, then we're good to go. And I'll show you an example of that here. We have all down here, we've got the histogram below the signal line, but when we look at this one candle right here, and I draw a vertical line on this, we can see that the histogram and the signal line have come together. That's good enough as a buy scenario. We are not going to be filtered out of the trade at that point. Now, however, if the previous candles anywhere in here, we got a buy signal, this is something that I would not be interested in. On this one candle, where the histogram and the signal line have come together, we're okay to go for a long trade. And then once that histogram does move above the signal line, we are absolutely in the clear to take those buy trades. And the same thing goes with those sell opportunities. Let's see if we can find one in here. So we can see that there's a little bit of a gap in here where the histogram is higher than the signal line, but generally starting on this one candle here, we're looking at the histogram and the signal line coming together. So at this point, I would be okay to be looking for sell trades. And at this point here, we can actually see there is a sell trade in progress. We do get a signal to go short. So with that being the case, I think we can easily get into the rules now. We kind of have an idea of how the different parts work. So from here, we're going to take a look at a couple of buy scenarios and a couple of sell scenarios. And we'll take a look at the rules. We'll look at where our entry goes. We'll look at where our stop loss goes. We'll look at where our target goes, and then how we're going to manage the trade along the way. Now, we've got lots of different opportunities to buy, but we'll pick something that's in the middle of the chart here. So I'm going to zoom in and we'll take a look at this area in here. So we're going to look at the MACD. This is the first thing that we need to see. We need to notice what direction the trend is in. So from this point on, we are looking at an uptrend. And that simply means that we're looking only to buy. We're looking for long trades. So between here and here, when the MACD turns down, we're simply only looking for opportunities to buy. We're not looking to sell. We're just looking to buy. Now, we're going to be looking for opportunities to buy when the MACD itself is at or above the signal line. Now, the MACD is above the zero line, so that gives us the idea of the trend. So now we're looking for the fact that we get a signal when the MACD is at or above that signal line. So the first thing we see is the trend direction. So the next thing we want to see is a market pullback. We want to see the pullback in such a way that these blue dots will appear above the price. And we're going to see that right in here. Now we have a couple of different examples in here. Let's zoom in even closer. So we've got these blue dots. I'm going to thicken this up just a bit. So let's thicken this up so we can see them a little bit better. So we'll go 3. And all right, so we've got these blue dots. So we're looking at these blue dots across the top of the price. The market has pulled back far enough in order to give us those dots. And what we're looking for is for a candle to close above the dots. So we have this uptrend. The market is above the moving averages or this moving average channel. The price pulls back. It gets to that moving average channel. The dots have appeared across the top of the price. And we're looking for a candle to close above the dots. And we get one right here. And I'll mark this off with a square just so we can see this one. So this becomes a signal candle. This is our entry candle. We want to enter this trade at the close of this candle. So once this candle closes, this next candle opens, that is when we are getting into the trade. I'm going to mark this off as our entry level. So we've got this entry at the close of this candle. Now, the next thing we want to do is determine where our stop loss is going to be. So this becomes our signal candle. We're going to look down to see where that magenta moving average is of that signal candle. That magenta moving average also happens to be in the same position as this magenta dot. Now, that's not always going to be the case. In this example, this is just a coincidence, but this is where our stop loss is going to be. So I'm going to mark that off as well. Now, I don't want to put the stop loss on that magenta line. I want to move it a little bit below. I need to give that market a little bit of breathing room so I don't get stopped out as soon as the price does hit it, because occasionally the price will touch that magenta line and then bounce off it. So I want to give that market that little bit of room. Now, the next thing, once we've got that stop loss determined, is our take profit. Now, the default take profit for this system is 1-to-1, which means if we have, well, let's see what it is. If we have, in this case, we're looking at about 48 pip stop loss, we'd be looking for a 48 pip profit target. So let's put a 48 pip profit target up here. Let's just measure that just to be sure that's exactly what it is. So we're looking at 49. Yeah, we're good to go. So we've got a 1-to-1 target on this trade. Now, as soon as this trade starts to move, we're in this trade, we get a little bit of a pullback, and on this one candle right here, we have a close into profit. As soon as that close into profit happens, I'm going to look down at that candle as it closes and see where that magenta moving average is, and I'm going to move my stop loss to just below that moving average. So I'm going to duplicate this. I'm going to move it to just below that line. I'm going to take this one and turn it gray, simply because we were looking at where the stop loss was. So this is where the stop loss was. This is our entry. This is our take profit. This is where the stop loss is now. And this market moved really nicely. It hit our take profit in the next candle, but it doesn't always go this way. And we do get an opportunity to manage the trade quite substantially as the trade goes. Using these moving averages the way they are, this moving average channel is a very aggressive way to reduce the risk on our trade. And that is what makes this a low risk trading system. We're not going to win every trade. I'm not going to sell you on the fact that this is going to be 100% winner. I want to sell you on the fact that if you follow the rules very clearly and very carefully, that you will reduce the risk on your trades in almost every single situation, which means if you're aiming for a 2% target on your trade, and if you lose that trade, you lose less than 2% almost every single time, which means you lose 1%, you lose 0.5%, often you'll break even, you'll be able to move your stop loss to your entry and so on. And the settings of this moving average channel is going to serve very well for this. So let's zoom out a little bit and take a look at another trade. Now, there is another trade in here. So if you missed this first trade, let's take a look at this second trade. So let's get rid of the different parts and let's take a look at the second trade. So we are followed by a second trade right away. Now, these dots look really big, but when we're zoomed in, they seem okay. So here we have the price moving up. We've got this trend being up as the MACD is above the zero line. Price has pulled back, and what's happened is a series of dots has appeared across the top of the price. On this candle here, we get a close above the dots. So I'm going to draw this square around it just so we can see that this is our entry candle. And at the close of that candle, we're going to be placing our entry. So we place our entry at the close of this candle. Let's make it red so we can see that. So we've got our entry at the close of this candle here, and I will put this vertical line over it so we can see all the different parts. Now I'm going to take my stop loss and I'm going to place it just under that candle's magenta moving average. So if I duplicate this and I drop it just below that candle's magenta moving average, we have our stop loss. And then from here, we're looking at 1-to-1. So let's take a look and see what the stop loss on this one is. So we have again, a 48 pip stop loss. So let's move this up. Let's see if we can get about a 48 pip profit target. And let's measure that. So we have 50. So we're just a little bit high. That's okay. There's no problem with that. So we've got a 1-to-1 profit target on this one. So from here, this very next candle closes in profit. So at this point, at the close of that candle, I'm going to take a look and see where the magenta moving average is for that candle. And I'm going to take my stop loss and move it up to that level. Now, this next candle happens and it closes. So we get to move our stop loss underneath that magenta moving average of this candle, which would be right here. Next candle closes, we're going to take a look and see where that magenta moving average is right here. Next candle closes, magenta moving average is right here. Next candle closes, magenta moving average is right here. So at this point, we are essentially at break even. Now, if we were to lose on this trade, let's say this market could not get any higher and it didn't close us out in profit and it came back, it is going to take us out at break even. And that is how fast and efficient these moving averages are going to work as far as managing the trade goes. Now, if this next candle closed and it did not close in profit, we'd literally have our stop loss in profit. So if that's the case, we could not lose money on this trade simply because of the aggressive nature of this moving average channel. But this is how the long trades are going to work. We've got this nice range right here. We have a trend that is up and it starts on this section right here as the MACD moves above the zero line and it goes all the way to here. So we have lots of different buy opportunities in this and we're going to see a lot of nice successful trades. Some trades will not work out exactly the way we want them to, but the trades that don't work out, the risk is going to be reduced on those trades. So if we have only half of the trades winning, meaning we're going to win the full amount on our trades, but the other half of the trades that lose, we're going to lose less than the full loss. So we're going to win 10 pips and lose 5 pips. So for every 5 pips we lose, we are possibly going to win 10 or more pips. So even if we're winning half of the trades, we're going to make money simply because of the aggressive nature of the trade management using the moving average channel. So we can see that we have a buy trade right in here. Let's zoom in a little bit. So we've got a buy trade here where the price closes above this horizontal line. So we would enter the trade here. The stop loss goes underneath this magenta line and the price is going to move up. And we're going to trail our stop loss underneath that magenta moving average until the trade is closed, either by hitting our stop loss or our take profit. We get another signal to go long right here as the price closes above the support and resistance indicator. We're seeing that the MACD histogram is above the zero line and above the signal line, so we're good for a long trade there. Again, the stop loss goes underneath the magenta moving average and we're going to manage that trade until it gets stopped out. So we've got a couple of winners and then we have another winner and another winner and we have another winner in here and it's followed by yet another winner. So let's take a look at a couple of short opportunities using the HPLRPS system. We're looking at a section of the market where it is predominantly dropping. We're looking at the market moving down and we can see that this MACD is mostly underneath this zero level. So let's take a look at a section in here. The MACD drops below the zero level at this point, so we're looking for short opportunities and that carries all the way through to about here. So let's just take a look at the beginning part of this. So we've got this market. We are now looking for short opportunities. And the very first short opportunity we get is right here. So we're looking at this one candle as it closes below this support and resistance level. We have this horizontal set of dots. The market closes below this level. We are now in a short trade. At the point of this trade, I'm going to put a horizontal line on this just so we can see how the MACD works. We have at the close of this candle that closed below these dots, we are looking at the MACD being below the zero level. We have this MACD histogram being below its signal line. So we are not being filtered out of the trade. This is a good trade to take. So we are interested in taking this short trade. So if that is going to be the case, we are going to take our short. We're going to place our entry at this point here. Our stop loss now will go above that blue line of that signal candle. So we're looking at this blue level right here. We have this 8 EMA blue moving average of the highs. We are going to put our stop loss just above that level. Now we're going to go for a 1-to-1 take profit on this one. And as this trade moves, we are going to manage our stop loss along this blue moving average. So we've got this blue moving average moving down. It moves in our favor really, really well. We do reduce the risk on this trade substantially as this trade progresses. And finally, when we do hit our target, the trade at this point would have had our stop loss above this candle, which would be right here. And we would have reduced the risk at least by 50%, maybe just a little bit more. So if we're going to win on this trade, we're going to win. Let's take a look and see. We're going to win 44 pips. And if we had lost on this trade, we would have lost about 19 pips. So a little bit less than half. Now we get another signal to go short on this candle right here. Now, during this actual move, we got another signal to go short. Now, we don't have to take them both. You can if that's what you want to do. You're going to find that these signals do happen throughout an entire move, but we do have this signal to go short. So at the close of this candle, we're going to look to the MACD. Is this trend still intact? Are we being filtered out of the trade? On this MACD right here, we can see that A, it is below the 0 level, and B, this MACD histogram is below this red signal line. So we're not being filtered out of the trade. It is showing us that this is a nice trade to take. We are going to enter the trade at the close of this candle. We are going to take our stop loss and place it above this blue moving average of the highs, which would be right here. And again, we're looking for a 1-to-1 target on this one. Now, this is a beautiful trade, and I like to see that it happens this way regularly. Unfortunately, it doesn't always happen this way, but we do take it when we can, and this one candle takes us out of the trade. We get this one sell trade in one candle, hits our target, and we are done in a course of one candle. Now, this is a 4-hour time frame, so it did take 4 hours to do this, but we can do this on the 5-minute, the 15-minute, the daily, the 1 hour, whatever the time frame is that you prefer. This is going to work for you. Now we've got some more trading opportunities. Let's just get rid of all of these lines so that it's nice and clean again. I do not like too much clutter on my charts. So we have another opportunity to go short right in here. So we're looking at this short opportunity at this point. We've got the MACD underneath the 0 level. We have the close below the dots. So this one candle does close below the dots. We've got the MACD histogram being below the signal line. So this again is a nice signal. We are good to go short. The close is where we're going to enter the trade. This stop loss is going to go just above the blue moving average of that signal candle, and the take profit on this is going to be 1-to-1. Now again, we do not get the opportunity to manage the trade on this one simply because of how fast this next candle moves. When you are trading with the trend like this, you're going to find that a lot of the times the market is going to move quite aggressively in your favor, in your direction, and that is what we really do want to take advantage of. We want to see that the market is moving in our favor, and we want to benefit from those big aggressive moves that move fairly quickly, that move so fast that we don't even get a chance to manage the trade. But when we do get those trades that don't move as quickly as we would like, we do get those opportunities to reduce the risk on the trade. And that is such an important aspect to making your account grow. When you're losing less than you're winning, you are ultimately going to grow that account whether you like it or not. Now, I've got this situation that I do want to show you. We have a nice signal to go short. Maybe this isn't the nicest signal because this candle is huge, but we're going to play this out anyways. We're going to take a look and see what happens. This is a short signal. We're going to put this right in the middle of the chart. We've got this vertical line going through this candle. We have this short signal here. We've got the MACD below the 0 line, which gives us that downtrend. We've got this one candle closing below this horizontal line, and from here, we could be looking to go short. So I'm going to place my entry at the close of this candle. My stop loss is going to be above this candle at this blue moving average. So I'm going to place the stop loss just above that blue moving average, and I'm going to place my target 1-to-1. So I'm going to have to squish this down a little bit because the market does not move 1-to-1 on this case. So this is about 1-to-1, and you can see that the target never gets hit. But I do want to show you how this system will actually make you money even though you are not getting your target hit in this case. So we've got this entry, the trend is down, everything is looking really nice. I'm going to zoom in just a little bit. And from here, we have our stop loss placed. It is above the market, above these moving averages. Now, the market starts to move in our favor. So we're going to take our stop loss and we're going to move it along this moving average until we get closed out, until the market tags our stop loss. So I'm going to follow this along. And as each new candle closes, I'm going to be moving my stop loss down, down, down along this blue moving average. And now we are in profit. So if I'm looking at this red candle here, we can see that the stop loss is in profit, and finally this one candle takes us out of profit. So the stop loss on this one, it's going to be 1-to-1 so I can measure the target. The stop loss was 32 pips, and ultimately what we ended up doing is not getting our 32 pip target hit, but we did get stopped out at 9 pips. So we actually made money even though the price did not hit our take profit. The market continued to move and it didn't go very far. It didn't hit our take profit, but because of the trade management of this aggressive moving average channel, we were able to reduce the risk on this trade so much that we actually made money on this trade. I hope this system makes sense to you. It is a really simple, a really straightforward trading system. You're going to find a lot of trading opportunities. You're not going to win every trade, like I said earlier, but you are going to be able to reduce the risk on almost every trade you take. And that is what I consider to be one of the holy grails of Forex trading, being able to lose less than you win. We're taking advantage of support and resistance levels. The market is going to break through these support and resistance levels if we are indeed in a trend. So we're going to take advantage of this. This is old school trading. This is one of the foundations of successful trading. This is how traders have been trading for years and years and years. And this is how some of the richest traders have made their money. Trading support and resistance levels. When you get a market that moves beyond levels of support and resistance, it tends to want to keep moving. And we are going to take advantage of that. And once that market starts moving, we start to trail our stop loss in order to keep that risk as low as possible. Now, using these moving averages keeps our stop loss close to the price, but not so close that we get prematurely stopped out. Occasionally, you're going to get an instance like this here where you do get a spike through these moving averages and it will take you out. They're annoying, but we're going to put up with that because it is, in the end, going to benefit us more than it hurts us. All right, thank you for watching this video, and I wish you the best of luck with the HPLRPS trading system. All right, that's it for today, guys. Remember to watch out for my next email when I will cover the important questions that you may have about the system and from comments I received below. And of course, please post your comments below on this page, as I'm going to choose a few people that have put some thought into their comments and reward them with a fantastic prize. I'll see you tomorrow.